Hello and welcome back to the moving averages section. So we decided to do another video on trend reversals. So the last video was of course on sort of retraces, but what we're looking for now is actual trend reversals. So you can see we've got a chart here, Aussie dollar on the monthly time frame. So when you look at a monthly time frame, sometimes you see that and when you have a nice consolidation. So let's say for this this would be a consolidation. We had a nice crossover just while price was still inside this bot consolidation. So just here, which is basically after this bullish candle, crossing over happened within this candle here. So before it closed, this would have been crossing over. This was in July of 2017. So if we go down to the weekly time frame, so within July we had a cross. So it would have been here. This is the first candle. So we had a crossover, came in weekly time from just here. Price came up, pulled back just here. So this will give you the opportunity to get long. So you've seen that there's a crossover here. Monthly is looking bullish as well. So then you can look to take long, maybe from, if you then scale down to maybe a daily time frame to find where is the support. So July 2017. So as you can see here, we've got support would have been around here. So if we label that just quickly for you, around there, touch higher. Price broke above. If we maybe put on a Fibonacci, 78.6 retracement. Also then a break of a trend line. So if we go down to the 4-hour time frame, so here you've got a trend line, 1 touch, 2 touch, 3 was the tweezer bottom just here, 3rd touch, also touched the support level. That's when you go long with your stop loss. It potentially could be just, I'd say around here, safe to just put it just here, 40 something pips, and you know that price is going to break above this because you've seen the crossover on the weekly, you've seen the bullish engulfing on the monthly time frame, and then you've seen that the MAs have just crossed over. Probably when it's just started to break out here, the MAs would have been crossing over. You can then target, let's say, something up here for a huge swing trade. 8-to-1 risk reward, price even broke a bit higher, and then start to retrace from there. So that's just one example. What we will do is also go to the next currency pair we'll look at is we'll look at euro dollar. This is quite interesting in fact because this was a really nice crossover in the MAs after this once again another consolidation area. So when we zoom in just here, what we can see is consolidation, I'd say around here. See, nice 2 spikes. If you know about fake outs or swing fades, you could have gone long from here. This is actually a swing fade and not a fake out because price didn't close below it, spiked below, fell to close below, and then as you can see, nice engulfing. So you could have gone long from this candle. I think we'll go through swing fades another time, but could have gone long from that candle. Stop loss here. Could have gone first TP up here for a 2 something to 1, or got a bit higher. If you've gone for slightly later entry, slightly tighter stop, TP would have to, yeah, 2-to-1 up. These are, you know, once it breaks out, it's going to break above these highs and go to the next level of resistance. But moving on to what we're looking at today is the crossover. So the crossover occurred here. Once again, before price broke out. Alright, so before price broke above this key level of support as well, sorry, of resistance as well, the crossover occurred, giving you a chance to get long within this candle or even on the pullback. Okay, so If we go down to the weekly time frame, once again we've got a cross on a weekly time just here. So within that, you know that price is looking to head higher. At the same time, or let's look at what month it crossed over on the monthly. So the monthly time frame, we had a crossover at within that same July time frame. So crossover came in around these two candles. So once you see that crossover, looking for, okay, how can I get long? Look at this time from here, you can see get long from pullback here. So when price came up to this level of support, get long maybe a day time frame or a 4 hour. Breakout, potentially a pullback here if we go to the 4 hour, or the safer option would have been to get long from here. So you know that price is going to continue higher, so you hold for a while. Okay, so you know the crossovers occurred around here. Once you come to this area, maybe draw a trend line, counter trend line just here. Okay, well, price has just broken out of the counter trend line, either here or scale onto the 2 hour. Take a long from here, stop loss maybe just around this day level of support. Quite a wide stop, but also take profit's going to be up here and also to the next, because you know price is looking to surge higher. After such a long consolidation, price usually rockets to the next key level of resistance, which it didn't quite get there, or it did in fact. So you were in that trade for about a month and a bit. So there's that trade. If we maybe scale onto the 1 hour on the 8th of July, we'll go for 2 hour in fact. Breakout here, long from there, stop loss in around here, and then obviously once again a huge target. So this occurred definitely after the after the crossover, or if not, the crossover definitely occurred, and you know that, okay, well, so with this you have to be proactive, because the crossover is at this point it's occurring. I reckon, from my experience, it definitely would have occurred after this huge push on a monthly time frame. This cross would have then actually have sort of been confirmed. Then you can go long with much more confidence, maybe here, or pull back to this level of key support. That would have been the second entry. This is a bit more of a conservative entry. This one here, you'll be more sort of proactive. With the first entry, this entry here, you'll be more reactive. So this is about to cross over. Here, it's definitely crossed over. Here, stop loss can be risked. So the more aggressive approach is to put it just below this area of support. More conservative is to put it around here. Once again, take profit here and above. So first TP and second all the way up there. So you can see that's two examples of when you see a crossover on the monthly, etc. You can expect a huge move to the upside, or obviously to the downside if it's a cross to the downside. But you can expect to sort of hold your trades for a bit longer, because you know that after a long time of consolidation, price is going to be explosive. Okay, next we'll look at sterling Aussie, and I think that will be the last. So Aussie dollar, yes, euro dollar, sterling Aussie, also cable. So monthly time frame, let's see if we had any consolidation on sterling Aussie. Back here it was, so excuse the messy chart. Let's go to the bit of a clearer chart for you. Okay, so as you can see, consolidation down here, I would have labeled it probably there. Crossover once again in this candle that's about to break out. So as you got a crossover here, if we were to approach it, once again go down to the weekly, see what the MAs are saying on this time frame. So the MAs had crossed over down at the bottom, it looks like, so near to the bottom just here. So you know you've already got a crossover on a weekly. The monthly is looking to align. this is a perfect opportunity to go long from the pullback. So the breakout and the pullback, maybe you can find a long opportunity within the 4-hour time frame. On a daily time frame, the cross came once again down at the bottom. Breakout, pullback, you take a long from here once again. As I said before, if it's near support, you can take the, you can go to put your stop loss just below the support. So even if you go long from here, you still got a nice stop loss of around there. Take profit. I'm not going to go for the first one just because the rule said about the long consolidations and breakouts. So it would have even gone a lot higher, as you can see, even gone up to 190 before it even provided a huge retrace. So you could have held it for longer. With this, I think there's ways to find targets. We'll go through that in maybe a different video. Right, so you see, you got the breakout, nice shoot up, even pull back through to get a second opportunity with a tweezer bottom just here. Obviously, you can then scale onto different time frames to find other entries. We'll scale onto the 4-hour, and then we'll move on to the next or the last example. Okay, so we weren't able to load up the 4-hour time frame just because it's too far back, being 2013. But if you look on this example here, breakout, pullback, and you even got an MA breakout on the entry candle on this time frame. So an 8-hour time frame breakout would have been a good entry. So we'd have entered on this time frame if we're going by the breakout of our MA, which we'll go through next video to be an example to go through. But bullish engulfing, stop loss just behind there. Take profit was at least here. So there's a 3 to 1. If you've gone up here, 4.7 to 1, and lastly 6.5 to 1. Or you had another opportunity to get long from support just here. If you weren't confident enough to go long after this hammer, which you should have, but if you're not, huge engulfing, stop loss. Once again, take profit. So 3.5 to 1, 5 to 1, and then 7 to 1. So all good examples, okay, of how to look for these sort of MA crossovers on a monthly, and then work your way down to find sort of more long-term positions. It also can be used to find short-term positions, but we do generally have wider stops with these, so we generally hold it for at least a couple of weeks with that. Okay, and the last example we'll go through is cable. Okay, so that is actually the end of this video. We didn't find another example from the last couple of years. Going back too far would be problematic to show you sort of the lower time frames. So I hope this video makes sense. Just take notes of everything and go through it maybe a couple of times. But as I said in this video, make sure you look at the monthly time frame. Try to be proactive, not reactive. So when the MAs come close to crossing over, then scale down to the weekly and daily, see what price is then doing. Just because you have to be proactive to anticipate a crossover. As if you get an early entry, it really does help. Once you get a crossover, then the breakout, you'll be well into profit, and then price will then surge even more in your favor. Okay, so thanks for watching. In the next video, we'll go through counter trend lines and entries. This will probably be on like the 4-hour and 2-hour time frames, and potentially also the 1 hour. So thanks for watching this video. You can now move on.